One of the largest expenses that most people have actually sits in plain sight, and it can make or break your ability to buy a home. In this video, we're going to talk about exactly what that expense is, and we'll also talk about what you can do to limit the impact it has on your home buying ability and your financial future. So let's start with understanding that according to the Bureau of Labor Statistics, the number one thing Americans spend money on is housing, and the second is transportation, with the largest portion of that cost being the car payment. The average monthly car payment in the US is $730, and for used cars, the average monthly payment is $520. For the sake of simplicity, let's use $600 per month since it's somewhere in the middle. $600 is no doubt a lot of money, and there's two ways a $600 car payment can affect your finances. The first way is somewhat obvious. It's in your ability to save money. If you're paying $600 a month for a car, that's $7,200 a year. That's money that's not being put toward paying off debt, building an emergency fund, or investing, but rather being paid toward a useful but rather expensive liability that will depreciate over time. The second way a car payment affects your finances is in your ability to qualify for a mortgage. When lenders look at your financial situation, they decide whether to approve you for a loan based on your total monthly expenses divided by your monthly gross income, also known as your debt-to-income ratio. The higher your debt, the less of a mortgage you can qualify for. For instance, when getting approved for a 30-year fixed mortgage with a 7% interest rate, a $600 monthly payment is equal to $85,000 in mortgage qualification. Now, having the $600 car payment versus having no car payment is the difference in being able to qualify for a $415,000 mortgage versus a $500,000 mortgage. Now, everybody's situation is different, so as a disclaimer, those numbers are for example purposes only. And I know it's tempting to buy a new car or upgrade to something flashier, especially in our society where we tend to look highly upon people with newer, fancier cars. But here's the thing. Buying a car is ultimately buying a liability that depreciates over time, and buying a home is an investment in your future. When you're thinking about your financial future, consider this. You could spend $35,000 over 5 years on car payments. But what if that money can go into savings for a home? You'll be closer to home ownership than you think, or you might be all the way there. Here are a few solutions to help lower your car payment while keeping your home ownership goals in mind. Number one, instead of taking out a huge loan for a brand new car, consider buying a reliable used car. You can save thousands on the purchase price, and the monthly payments will be significantly lower. And added bonus, if you can find a 10 to 15-year-old car that's in good shape with low mileage where you can buy it in cash or pay it off in a short amount of time. Older cars tend to have much lower insurance premiums, and they're much more affordable. I actually drive a 1999 Jeep Wrangler, which leads me to number two. If you have to finance a car, look for a car that fits comfortably within your budget. The less you spend on a car, the more you'll be able to save for a down payment, and the more of a mortgage you'll be able to qualify for. If you can also reduce the amount of money you're spending on gas and insurance by joining a company closer to your home, asking your boss if you can work remotely a couple days a week, or by shopping for new car insurance every year, you'll be able to significantly decrease your cost. And at the end of the day, your car is important, but your dream should come first. If you're serious about buying a home and building wealth, make sure you're not letting your car payments get in the way of that dream. Work to save money now, and you'll be glad you did. And if you're saving money but aren't sure what to do with that money, exactly what accounts to put it in or how to invest it, check out this video here.